According to the latest CPI data, vehicle prices are actually down slightly year over year. It's everything else that drives up the prices. The interest rate for a new vehicle hovering above 9%. Auto insurance prices, as we just mentioned, up 16% or so over the past year. And all this is pushing Americans to keep their cars longer. The average age of a passenger car on the road now is a record 12.6 years, so says S&P Global. Joining us now for more is Colin Langan, automotive and mobility analyst at Wells Fargo. Colin, new vehicle prices, welcome number one, new vehicle prices down about 1% year over year, used vehicles down 10.4%. That's quite a change from the growth we saw during the pandemic. But boy, the basic automobile is $50,000 or more. And there are plenty of makes and models that are going for more than $100K. Jeep has one.
Yeah, I mean, we've seen since COVID record auto pricing, and it's been a big tailwind for the Detroit 3 and the traditional automakers. I mean, a car since COVID is over $10,000 more expensive. So, yeah, it's down a meager 1 or 2%, but it's been on a 6% CAGR for many years now. And I think we're going to see more pressure. We see excess industry capacity, and so automakers are going to have to discount to move volume. But so far, it's been a very slow pace so far this year. But it's one of the key risks is, I think, price normalization off of record pricing over the next few years.
So you don't think they're going to be able to keep taking price the way they did in 2021, 2022? Those salad days are done.
Well, there were structural things going on. So you had COVID, but you also had the subsequent supply chain issues. So the industry was handcuffed. There was a point in the industry where if you made the car, you sold it because there was nothing on dealer lots. Those days are long gone. Inventory is back to, over the last few months is back to the days of supply where it used to be at. So you go to a dealer lot and you could find a pretty good selection. The other problem that's happened in this period is we've added about 3 million units of capacity. So we have sales that are actually below pre-COVID levels, but more industry capacity. Historically, what happens is if you have too much capacity, there's such a motivation to discount the car to get that capacity higher. And I think that's what's going to play out over the next few years.
Colin, I'd like to ask you about the mix of what the manufacturers are producing in terms of internal combustion versus EV. I think it was recently reported that Ford is losing $132,000 per electric vehicle they make. Wow. So we talk about the prices of cars. Even with the higher prices, the manufacturers are losing money, some manufacturers, on these electric vehicles. Are they recognizing, did they make a mistake? And are you going to see them retrench a little bit and go back to where they're making money rather than just producing cars for the sake of producing cars?
Well, I don't think, to be fair to the industry, they've made a mistake. They're in a bit of a dilemma. So they have EPA targets, and it's going to be very tough for them to hit those targets. And then the EPA targets all the way to 2032 are extremely aggressive. So they're going to have to sell EVs. All we've seen so far is them pull back on their EV plans. There's a lot of uncertainty. The election actually might dictate some of this. But the unfortunate reality is they have to sell it. I think they got a bit overconfident in how much they could sell. But their actual regulations, they're going to have to sell certain EVs to hit those regulations. And so, unfortunately, this is actually another pain point in addition to pricing, is they're going to be forced to sell EVs. And unfortunately, it doesn't seem like the consumer is that interested, which is why we've seen, while industry pricing is held in, EV pricing has pretty much collapsed.